So this is a video I've been needing to do here for a little bit, is just to go over and explain like all the indicators and how I use on the set that I give everyone in the room. So I'm gonna just go over this pretty quick and raw on how this works, and we'll just go ahead and jump right into it. All right, so here we are looking at Thinkorswim. So, and this is the set that you'll get whenever you become a member of New Age Wall Street. I'm going to start here from the top and then work myself down. And I've put a lot of thought process into this on why I put the indicators in here, and everything has a purpose for it. And I wanted you to have enough for you to use the system in a couple different ways, but not be overwhelming where there's lines and things just all over the place, and you just get over analysis paralysis. All right, so up here at the top you have these labels, right? So you have prior day close, change, so the prior day close price, which is the price that the prior day closed at. And if you also take a look, and I'll use this Teladoc as an example real quick to the side. There we go. I had an error on my Thinkorswim. Sorry about that. So if you look over here on the Thinkorswim, you could see that this blue line, so the blue line that you see going across right here, that also marks on the actual chart where the prior day's closing price was as well. So this was the day before last. This was yesterday last session. So it's nice to have also as well as a line here, so then you could see it and not only just see the number here. So it especially helps whenever you do like red to green type strategies or green to red strategies, things like that. So then the next one is the change dollar amount. So this is the dollar amount that Teladoc went down. This is so this is actually Apple here this day. So it came down $10.10. The percentage amount that it came down, or that it moves up. And keep in mind these labels are colored. So whenever it's negative, then you're gonna have them be red. If the say it's green, so like say something closed green, or it's up, it's actually gonna be the labels are gonna be green. All right. Now like I said, change percent price. That's good to know, like especially with the ADR, ATR. Like where your ticker's at on the day and how it's probably going to perform. Also SSR. So SSR stands for short sale restriction. Short sale restriction is whenever a ticker moves 10% down from the prior day's closing price, and you can't slam the bid to go ahead and sell anymore. You have to sell on an uptick. So that prevents you from slamming a ticker into the, just driving it into the dirt. We use this here for for a bounce strategy. So like, if anything gets overextended to the downside, usually whenever it gets to this SSR level, it'll bounce. So you could actually put an order around in that area at that price, and then you're going to get a bounce. So a good thing from this was actually on ConocoPhillips the other day. This was let me get rid of these lines here real quick. I apologize. So right here, after earnings on this day, you can see how it just got driven down way hard. And then if we come back on this day, you can see where it bounced here at this 35.90, right? And so SSR that day was around in this level, and it bounced back up, and we're able to actually just put an order here for the bounce up. And I was able to make some money just on the bounce on the SSR, just knowing where the SSR is because of this move. VWAP. So sometimes you'll see me plot a VWAP as a line. I don't do it all the time, just because you start putting too much stuff on the chart. But I do put the price of where the VWAP is currently at on here as far as the actual label. And then this is the T3. So the T3 is actually this line that you see, this red line that you see right here, and then it turns green in this area. That's called the T3 line. So to just jump into that real quick and what the T3 line is. So I like Fibonacci's quite a bit. So this is based off of the 8, 13, and 21 EMA. And it's all averaged together and then smoothed at the whole. and this is just meant for trend direction and momentum. So as long as the price action stays above here, like you see on Apple did the day before last, which would be Thursday, as long as it stays above the line and it stays green, then that's your indication to stay in the trade, right? So you could stay in, and then every time it bounces off it, those are ads, or you could so you on the pops you'd add, on the pullbacks you could on the pops you could sell, and then the pullbacks you could add to your position and just keep on doing it all the way up. So this is just like I said, for trend direction and momentum, for you to make sure that you are on the right side of the trade. Now sometimes, like you could use it also as well whenever the trend direction actually changes. So like if we were to do like the 1 minute, you could see how like it popped up here, it went green, right? And so once it turned red, you could actually gone short or grab puts whenever it turns red, like this, right? And then whenever it turns green, you could get in and then go back and forth. Now, and that's just how that's used. So the 8, 13, 21 EMA all smooth together with the whole. It's just meant to show trend direction, strength, and then also momentum. So if you start getting like the price action pulling away from it really strong, let me see if I could do this. So if you start getting something like this, or let me go ahead and move it towards this way, where like the price action moves away from it really strongly, then that's a really strong like momentum change that way. Now if it's just riding it kind of like this, stair stepping, then that's a nice trend. It's not necessarily as strong as this where it actually pulled away from it or what have you, right? So that's something just to keep in mind with that as well. The next part that I want to tell you guys about, so these little gray lines right here are auto plotted Fibonacci lines. They auto plot they find the bottom, the top, and then place the retracements in between the bottom and the top. So you could use them as micro, or even scroll out and use them as macro support and resistance levels. And it works on the time frame of whatever that you put on your chart. So if you put a 30-minute, it's going to find the top of the 30-minute chart that you have. If you put in like the daily chart, it's going to do that one. You put a minute one, it's going to show you very, very micro during the day where it is. And you could see here, like on Apple on Friday, this actually worked pretty well, where it stayed below in this area, retraced to the 50%, back up here to the 78.6, back to the 50, right, up to the 61.8, and then back here to the 23, and then it held them actually really really well. So so that's how you use that, is just the Fibonacci's there. And like I said, you can make them work on a macro picture, or you can make them work on a macro picture as well. See, the next part I do want to talk about is the actual candles themselves. So these are called MFI candles. They are based on MACD, and then also like they have a little bit of the buying and selling pressure that is within those candles, and so I like these candles a lot because they indicate very, very fast. Whenever you're coding these candles, what'll happen sometimes is, because it's measuring backwards, the only way that you can measure these is by measuring backwards. And so sometimes you'll have such a macro outlook that it's measuring so far back or what have you, it repaints a whole section. And then say like you're at the price right here, and it repaints this whole section right here, and then you're already in the trade, you're already behind by like 15 minutes then at that point. So what you want then is candles that actually paint very, very quickly, and these ones are the best ones that I've found to work as far as painting your candles. So for instance, right, so we were using Teladoc as an example. Let's go back in here. So this is so the green right here is going to indicate buying, right? So buying or staying in a trade. And then you want to this is actually telling you to buy or stay in a trade whenever you're trying to make a move to the upside. And then when you get these green candles, right, these lime green, I don't know if you could see the lime green in here. It's a little bit different color than these ones. That's going to indicate that it's overbought at that point. And then that's one indication for you to get in or out of the trade, or excuse me, get out of the trade. If you're buying in the trade, maybe if you're, trying to short or, get puts. So that's one. And then what'll happen is whenever it comes back and you get this blue candle, The blue candles usually dictate sentiment change or neutrality. So that's going to tell you that, maybe we're going to go back into being in a bearish trend instead of a bullish trend. So you could actually use these as these blue ones as trigger points as well if you wanted to do so. Then the red right here indicates selling. So this is the selling pressure in here. And so like if you have puts or like if you're, short selling, this is going to tell you to stay in the trade, as long as it stays red. And then when it gets pink like this, so you see these pink candles, that means it's oversold. Then at that point, you're kind of anticipating a bounce then at that point for it to go back up. So like if you're short or have puts, then this is a good place for you to take profit. If you're looking for a place for a reversal for you to go up, there's also a good place to start looking at maybe for the trend to start changing. Now this started, kept on going down a little bit more, like a little bit more than that, and then finally I got the little bounce there, but it's there. Now I think that's all of them. So the green, blue, red, pink, lime green. Yeah, I think we got all the colors there. That's how the candles work. So as long as it stays red, right, then that's where you're going to go ahead and stay in the trade. And then if these turn pink, you may want to start taking a little bit of profit. Yeah, the trend may stay intact, right? It may keep on going just like it did on this one. But you still want to pay yourself in case it does bounce up and go the other way. So you want to make sure you're paying yourself at those relevant levels. Now moving down here to the second area that we have down here. This is going to be just a regular MACD, and I changed the parameters here to be a little bit more sensitive. And so basically the way that we use this is just like on the actual trigger line crosses. So like for instance right here on Teladoc, around in this area where it starts crossing up would have been where you're starting to look for this to bounce back up. Also like right right here in this area where it starts giving some divergence where it's going to start popping back up as well. On Apple, you could see that it started on the day before we were talking about. You could see that like it crossed here in pre-market, and then it never looked back like the whole day. You could see that it stayed up the whole day and finally crossed here up towards the top. But for the most part, it stayed up here most of the day. Now, this is the TTM squeeze. So the TTM squeeze is my one of the most used things that I use most of the time. This was developed by John Carter, and so what it does is measure volatility. It basically plots the Bollinger Bands and the Kentler channels in one indicator. And so the histogram part is the Bollinger Bands, and so that indicates the volatility being taken away the more it moves away from the center line. And you can see like on this day on Apple, it was always to the upside here the whole session. And in some places on the pullbacks, you would lose a little bit of volatility to come back and then go back up and then down and then back up. So the cyan, the light blue, is the indication that volatility is expanding to the upside, and then contraction when it's dark blue. And then you could also see like say Apple on Friday. So this one is Thursday, this is Friday. You could see that when this is coming down, you get expansion to the downside when it's red, contraction when it's yellow and it's coming back up. So the red dots right here, what you actually like to see on the red dots right here is the red dots are signal compression. So that means that you're getting an area of low volatility where you may see the price break out of that actual range. So what I like about this is if you're looking, so in this area on Apple, it did go sideways, and it was holding support right here where it was just going sideways for quite a bit. So that's what I like to see right here. And then you get those cyan bars again, and it starts expanding that compression here back to the upside, and then it never looks back for the rest of the day. So that's what we look for, something like that. You could also do like Tesla on Friday was all downside. So you could see that, especially like if you do like a bigger time frame, This was nice all day long, where this compressed here at the kind of vice versa of what Apple did. So compressed here to sideways, and then just dropped down here the rest of the day. So sometimes, so the compression doesn't necessarily signal direction. It just tells you that it's a period of low volatility and that the price is going to break out. So what you want to do is use your other indicators, like your T3 or your MACD for the cross to the upside to indicate upwards or downwards. So you see how it crossed to the downside, and so we came down. So this does not indicate direction, just periods of low volatility where you're going to get expansion out of that compression. All right. This here at the very bottom is CCI. This is your macro trend on a big time frame. So holistically, your goal is for you to have a micro outlook, right? So a very small outlook, like in a small period of time, right, of what it's going to do. So maybe like a little pullback, thing like that. But what, maybe on a macro trend, what it's the trend is for the overall day, or maybe the week, or what have you. So this gives you that outlook for the day, right? And you could see here, so if we go back to a 1 minute chart, so we'll use it. So here you could see that this all day long, this stayed green, right? So there's a center line that's also right here on the macro trend on the CCI, and I really want to show you here on a 1 minute chart. So give me a second. So here on this big time frame for the whole day, right, so that we're looking at, there was only one area right here where it came down. So it came down right here, that you could see these bars. These bars here in the area came down. Now, just to explain this a little bit better, so there's two parts to this. So there's the cloud portion that is outlined in the blue line, if you could see. And then there's also the histogram portion, that is the bars that are within the cloud or even outside the bar, like right here, right? So the cloud portion, it measures 50 candles back, takes the high, low, and close and square roots it, and then plots it. So it gives you a huge outlook of what's happening as far as the overall trend, right? So you're basically looking like at almost an hourly chart on a 1 minute chart up here, right? So this is giving you that. And then also, so if you're doing that, this is like I said, this is like almost like 1 hour for each one. Now, say you do like 5 minutes, that's going to measure 50 5-minute candles. So then you're looking at like 3 hours worth of data that you're, getting a way even bigger outlook of what's going on, right? Now, these ones here are half of that. So the actual bars that are within it are 25 candles, so they do half. And that's why they trigger a little bit faster. If you could see that the cloud is actually never, the cloud stays above or right at the center line right here, but the bars are further down on this drop because they reacted a lot faster to the price action than what the cloud actually did. Now, the arrows right here indicate where the bars cross. So where the bars cross, and then kind of gives you like little micro trend changes. So you could use them like that. Then the vertical bars right here are where the cloud cross. So you could see right here where this is all green, where it came up, and then the cloud crossed actually just like barely here, or touched it, and then it went back up. So these are telling you could actually use these as entries and exits, just from that. So then I don't think there was where it kind of indicated that it went up. So here's one right here. So here and like after hours. So this would be like an indication where when you would be able to get in this area where it goes green right that. And then whenever it crosses to the downside with the red dots, red vertical dots, that's where you get out. And then vice versa if you're getting puts or short selling. Good. So almost just like this here on Tesla, like we're saying. So you get the vertical line here to the downside, vertical dots. I don't know if you could see it. Yeah, there you go. Vertical dots here. And then that's where you'd get in based on this. And then it never indicates to get out of the trade until, it never really indicates to get out of that trade on the 5 minute. You can use the 1 minute, and you could see where like a little micro bounces in here. It does indicate, but on the bigger time frame, not until you get this little run up here towards the end of the day does it actually tell you to get out. So if you're using this to, you know, just exclusively take your trades, so like right here in this area, you're looking at like 14.97, and then where it tells you to get out is like right here, so like 14.35. So you're getting like 40 some dollars out of that move, which is really, really good. So that's how you use the micro macro on the CCI, is just to give you, is just to help you use the indicators to give you a bigger outlook of what's going on, to help you stay in a trade so you don't get shaken out. So that's the whole goal of this, is to help you stay in the trade and not get shaken out on a bigger time frame, right? If you guys have any type of questions about this or anything, guys, make sure you send me a DM, you know, send me a message, we could go over it. If you have any, if I left anything out, or, you know, you still don't feel 100% confident, just shoot me a message, we'll go over it. But you guys take it easy, see ya.